Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you.
Good evening and welcome to this episode of Brokers Digest by The Edge Singapore. I'm Jovi Ho and I will be your host. Thank you for joining us. Now, oil prices have been on everybody's minds this year, but what are some other commodities investors should look out for? How can investors treat commodities as a viable asset class? And as a consumer, how will trends within commodities affect your daily life? Now, to answer these questions, we have with us today Mr. Avtar Sandu, Senior Commodities Manager at Phillip Nova. Thank you for joining us.
Yeah, hi everyone. Glad to be on the show.
So maybe our first question for today is oil prices were cause for concern earlier this year, and it remains a focal point today. So within the commodity space, what else do you think will command headlines for the remainder of the year?
Okay, the first things first, I don't think the oil prices will be in the background very soon. Lately we had OPEC Plus, which is organization of primarily all the producing nations, at loggerheads with the chief consumer, the US in fact. And this thing is going to grab headlines very soon. Again, after the last OPEC meeting, they sort of like increased the production cuts to 2 million barrels a day. And this was something that unexpected given the timings and the November elections for their houses just around the corner. So, and we do have politicians in the US sort of drumming up a lot of noise regarding the Saudi especially. I mean, they are one of the chief is in OPEC, siding more towards the Russian side of the war than anything else. So we would find oil still grabbing headlines. Then the next thing will be lately a few days ago the Russians dropped a note to the UN saying that the grains deal that they had for the corridor to push grains out of the Black Sea, it's not working so much in their favor, so they may want to pull out. And this will definitely grab headlines going forward. Then next thing, we have a few other geopolitical events. We do have the Chinese renewal of their leadership, and we do know that for a fact that the incumbent will come in as the next leader, but who's going to be down the line, it's quite important because their outlook on things will roughly we look at whether this guy is more pro-growth or otherwise. Okay, then we do have climate change that will affect commodities. And this climate change, you know that what happened in Pakistan itself, the poor country was hit by a monsoon on steroids, as they say, and quite a bit of the country was flooded. And the wheat and the rice crop was, in fact, denominated. Then we do have other geopolitics events that will shape commodities in going forward. One of them would be things like how these events shape commodities. So whenever there is a geopolitical event, we say, okay, let's look at the fundamentals and see how they will be affected. And of course, ongoing still, I would say, is the strength of the US dollar. Most commodities are priced in the dollar itself, and a surge in the dollar further from here will definitely bring pain to a lot of commodity traders.
All right, thank you. And I think our viewers and as investors, they'll be interested to find out more about the following question, which is, in your opinion, which commodities may prove to be winners and which commodities may prove to be losers in the remainder of the year?
Okay. For example, the thermal coal itself, it was on the losing side for earlier on in the year, in the sense that it was something that most nations do frown upon. But now, given the high price of net gas and the usefulness of coal is coming back, the energy markets are still in turmoil, and prices are still expected to stay elevated. So thermal coal will be quite a definite winner, given the high price of net gas and the Russians still not relenting on their supply of fuel to Europe itself. This is one of the areas that we feel that would shape commodity prices. Then we do have others like palm oil, coal, and which we can elaborate further. Then after that, we do expect commodities that will be a loser, right? Things like, gold is often thought as an inflation hedge, but it's not really working this time, because the U.S. Fed wants to bring inflation down, and one of the ways they're doing it is through increasing rates. And rates are really a bit harmful for gold itself, in the sense that what was a boom in gold prices after February, when the war in Ukraine started, they sort of like taper down, and traders are more concerned about gold being not a good investment as compared to, say, the US dollar and treasury yields. The Black Sea grain deal will also affect a number of commodities that are coming out of the Black Sea. The Black Sea area is a huge fertile land which produces quite a number of sunflower oil. They have wheat. They have a few other commodities like rapeseed and all. And of course, the European bread basket is from the Ukraine side of the thing, and from the Russian side also around the Black Sea, and this will definitely be affected if the Russians go through their warning that they will want to pull out of the deal itself. So these are the ones which I believe will still command some price appreciation, will be winners, whereas the gold has been drifting lower. And on top of that, there are a few others that we can look at. For example, sugar. Sugar is affected by the rains in Brazil, and Brazil is the largest producer of sugar, and sugar prices have sort of like hit almost quite a bit of highs lately. And we do expect, given the high strong US dollar, sugar will be affected, because that's cane sugar mostly from Brazil. Then you have beet sugar coming out from the Ukraine side also, and sugar prices have stayed elevated for some time, will stay elevated for some time. Then we do have coffee prices. Coffee prices, as you know, has dropped off because of the harvest itself. Okay, these are primarily, I would say, the winners going forward.
All right, thank you. So you mentioned some edible commodities here. So maybe grains like corn, edible oils like soy oil, and even crude palm oil you mentioned earlier. So what are the prospects of these agriculture commodities as an asset class for investors?
For corn, I would say there's just not enough corn. Not enough supply. The US is the largest producer of corn. If you look at it, it's just the case. They are the major producer. Of course, there are others also, but they are the key. The harvest is to be coming in soon, and supplies are going to be tight. The weather conditions for corn will be okay, but according to USDA reports, we would have corn that is just undersupplied. And on top of that, there'll be issues moving corn out of the producing areas in the Midwest. As far as the budget is concerned itself. Okay, as regards soya oil, as an asset class, we would say there are pros and cons of it. The key is, of course, China itself, how much China will buy soybeans from the US itself. This soya oil is obtained from the crushed, and whether China will turn to South America, Brazil and Argentina, or they would buy US cargoes for soya oil. So depending on which way China tilt will be the key to soya oil as an asset class, viable asset class. Anyway, as far as palm oil is concerned, palm oil has bottomed out after hitting say 7,000 ringgit and above, and yes, dropped almost 50% of that. But the thing is this, because we do have a lot of inventories coming out of Indonesia, then of course in Malaysia the inventory is also high. But the thing is this, exports are also high. And besides the exports, we would have bad weather coming in. As you know, in Singapore it's raining quite a bit. And besides that, the rains would continue, I think they said, right until December, and it will affect quite a bit of the logistics and all. So palm oil is something that we can look at. And on top of that, they normally stock up for the Chinese New Year next year, even before the New Year comes. So China might be buying quite a bit of palm oil also, and the exports would negate the inventories itself.
So staying on these agriculture commodities, should investors buy exposure to these assets via stocks or via options and futures? So what will be some benefits or risks of agriculture, futures and options trading?
Okay, it actually all depends on the profile of the investor itself. The investor would definitely look at how much risk he is willing to tolerate, what is his outlook profile, how much he's willing to commit to that investment itself, how much his cost will be over his reward. So all these things the investor would normally take into account itself. But given that there are certain advantages where options and futures have over stocks itself, options and futures are derivatives that allow market for you to enter and come out of the market efficiently. There's also quite a bit of cost savings. And the thing is this, if you look at it, options and futures are derivatives that have slightly different risk profile itself. So I would say the investor would have to look at his own risk profile. There are several advantages of futures over options itself, and there's also ease of going into the market and just coming out of the market. And futures and options also allow the investor to get into a market that he may not have a company that deals with it. For example, if you take a company itself, you have to look at the commodity that the company normally will invest in, if it's a palm oil company or a company that deal in agriculture futures. Then you will need to look at the profile of the management, the capital structure and stuff like that. Whereas for options and futures, you need to look at a few other fundamentals and all, like supply, demand, the inventories, and the weather itself, plus your trading strategies that you would actually use. Given that futures have these various months that it's a forward curve that you can look at, and sometimes you take corn if it's in tight supply today, right, or in the current, but given that the farmers would plant quite a bit, so you can maybe do the front month against the back months, which maybe stocks will not allow you to, or you have to employ very sophisticated strategies for that. Whereas for futures and options, there are certain strategies that traders employ to make use of the fact that they have niche knowledge of these markets. And also futures allow you, and options also allow you to take care of short-term risk tolerance factors. Take, for example, the CME. They have very liquid agricultural weekly options where you feel that there is an event coming up. For example, the USDA on a monthly basis, when they come up with reports that sometimes shake the markets because the expectation was slightly different. So these weekly options allow you to manage your risk given your view of how things are going to turn out. And besides that, but there, of course, the futures and options, there's a slight downside. All right, you have to consider the margin arrangements, the expiration month of the contracts that you actually go in, and future options, like options, you have time decay and all. And besides that, you do have slightly higher risk that you need to know how the mechanism of the futures work. Sometimes, especially in agricultural futures, certain months may not be I would say the one that will give you best returns. And of course, you can always talk to your broker about these things. But it's more, and it allows you to employ sophisticated techniques that can take advantage of the markets. But most of it is for more sophisticated and savvy traders. I would say for people who are a bit on the novices, then you can look at simple, straightforward futures, but beware, futures is on leverage. A smaller money allows you larger profits, but there's also downside.
To recap, this evening we looked at commodities beyond oil. While risk-taking investors can target individual stocks to gain exposure to the agriculture commodity markets, agriculture futures and options offer many benefits like liquidity and price transparency to market participants. Please join me in thanking our guest, Mr. Avtar Sandu from Phillip Nova.
Yeah, good to be on the show. Yeah.
For the latest news on investing in Singapore and the region, visit theedgesingapore.com and follow us on our social media channels. Thank you for joining us, and good night.